Let's get started. Thank you to everyone for joining this webinar. The subject is debt prevention and management, and it's focused around small businesses, small to medium enterprises. My name's George Wolf. I'm the Queensland State Manager at CreditorWatch, and I'm really excited to be joined by a couple of fellow Queenslanders, Brad Bulow, partner at Sammut Bulow Bennett Partners, and Angela McDonald, who is the managing director, sorry, Angela, of Optimum Recoveries. So welcome to Brad and Angela.
Thank you, George.
Thanks, George, for having us, and thanks for creating the opportunity to have lunch with everyone today.
It's great to have you both along. Just a bit about CreditorWatch. CreditorWatch is Australia's largest commercial credit bureau, and we supply credit management solutions to businesses of all size to help people acquire customers, assess customers' viability for credit, and then protect themselves against ongoing bad debts, and also collect some collection tools as well. A couple of key highlights I just wanted to go through. As I said, this is really focused around small business customers. CreditorWatch was actually founded 10 years ago on the basis of helping small businesses who didn't have access to affordable and usable credit services. And it's really been a testament to the growth of our business that small businesses have supported us in such a strong way. So we do have over 50,000 customers now, and the majority of those are in the small business or the SME sector. And really interestingly, on this page, a key stat is that 90% of customers use CreditorWatch exclusively. They don't have, or they haven't typically used a bureau in the past due to various reasons mentioned, either affordability or ease of use. Small businesses really have a lot on their plates at all times, and the ability to navigate a tool easily and simply is a paramount requirement to them. We collect a lot of data from small businesses. We have 0-mile integrations which feed our various credit reporting models as well. Just to carry on, let's just talk about today's webinar in a bit of detail and what the reason is. Look, essentially, small businesses, small to medium-sized businesses have had a tough 12 to 18 months. Obviously, starting off at the beginning of 2020, and we're coming to the end of another financial year. So we thought it was a great opportunity to get the experts involved and talk about some strategies that we can use to manage bad debts or stay ahead of bad debts, and also be more proactive with managing your finances up front as well. And then finally, we'll talk about how to recover debts and some tips around what to do if something has turned bad and you need to recover it. You can ask questions. There's a questions tab in the webinar. I'll try to answer questions throughout or at the end. If we don't get to your question, your account manager or client manager will get in contact with you within the next 24 to 48 hours to give you a response. I want to introduce you to Brad first and foremost. Brad's been, he's an Ipswich local, and he's been a partner of Sammut Bulow Bennett Partners for the last 14 years. Brad really does have a focus on small business accounting. He'll support any business regardless of size, and the business offers traditional accounting services as well as some that are not so obvious, and we're going to talk to Brad a bit more about those later. Welcome, Brad.
Thank you, George, for that introduction, and thank you, CreditorWatch, for the opportunity to speak today.
And finally, welcome to Angela McDonald. Angela is the founder and managing director of Optimum Recoveries. She has a national footprint. She's prevalent in the AICM. She does a lot of work in the community and association space. And once again, she's also very passionate about helping small business. And Angela really believes that prevention is the best cure when it comes to collecting debt. So we really look forward to hearing some of Angela's suggestions, hints and tips as we go throughout the webinar. And Angela, thank you so much for coming today.
Thanks, George, for having me. We'll have a good chat about prevention being better than cure and your grandmother being right.
Great. Brad, I'll kick off with you. Look, my team on the ground here, we meet regularly with small business clients. And often, you know, they haven't heard of a bureau. They do a lot of things with one or two staff members often. How do we help them protect their cash flow?
There's so many answers and so many variables here, George. I think first and foremost, I always start with the client in question having a plan, having a strategy, knowing what the future may hold. Every business has, there's not many businesses that have the same consistent level of sales every month. A lot of businesses have seasonal trends, cyclical trends, and you've got to plan for those times. Without knowing having a plan for the future, you don't know when the time is to hire more staff. When is it time to invest more in inventory? So having a plan, monitoring it daily, things can happen. You've got to pivot quickly in business. Having a bit of an idea what sort of your billables or what your sales will look like moving forward. And I think we've also seen with things like COVID and all these, they call it the active guide, having that war chest for these sort of times where things just go pear-shaped and business can stall. And I think we've seen that. There was JobKeeper, cash flow stimulus incentives the government did introduce, but that on its own can't be expected forever. We live in a world of uncertainty and different things happening. So we've just got to, we've got to have a contingency plan in business as well. So it really comes down to planning, managing your overheads, managing your debt payments, managing your ATO as well. We often, I talk to clients and they're always surprised about some sort of debt they might get, whether it be from their accountant or from their insurance company or from the ATO after completing a BAS. But don't make them certain costs. Try to build some certainty around it. When you're engaging with suppliers, make sure there's a proposal in front of you. Make sure you know what things are going to cost. Make sure you talk to your accountant. You can look at your own cloud-based software program with Xero Mob, and you can look ahead and understand what that debt might be at the end of the quarter or the end of the month. So I really think cash flow planning is paramount, George. Also, and Angela can probably, she's probably more credentialed to speak on this matter as well, collecting debts as well. A lot of businesses just don't ask that question. As soon as that debt becomes 1 day old, you need to be doing something about collecting that debt. Have a plan, whether it be a structured plan, whether it be a phone call, followed by an email, followed by a letter. People, and often as accountants, I know we're pretty important service providers to most clients, but people will always pay their landlord first. They'll always pay the bank. They'll always pay their power bill, because without those, they can't operate a business. So collecting those debts, knowing the type of clients that you're working for, do your due diligence on those clients, and I suppose stop work if they're not, and from our perspective, we're, I think we, in the Fin Review, we're the #9 pro bono firm in the country, and I think what that means is that we do work with our clients, but it can mean that we're also soft with our clients as well. So I think you can't be taken advantage of, but really make it a specialised task in the firm. Find someone who's passionate about collecting debt, incentivise them for doing a great job, because it's very, very important. Probably the last thinking here, George, there's so many other answers, but I think it really comes down, we're talking about business cash flow planning, but also personal cash flow planning. I've seen a lot of occurrences, personal greed really flatten the business. We talk about running a business set of accounts, but run a personal set of accounts. We talk about going to market and for insurance, for accountancy services, for IT providers, but do the same at an individual level as well. I've had clients that make great profit, turn over millions of dollars a year, run at a good EBIT, but they still struggle to pay their debts on time. So I think it's just working within, don't be greedy, work within your business model. Like I said, I've got clients who might earn 50 grand a year and they've still got cash at the bank. I've got clients who might make $500,000 a year and they've never got cash in the bank. So have a personal budget. Don't be greedy, because often your personal greed can often be the detriment of the business. I think one thing I'll throw out there too, George, is also know you yourself as well. When I say that, know as an individual, there's certain types of personalities that just love being out there chasing work, doing things like, you know, sitting on webinars or out networking with clients, but are useless at collecting debt or doing those sort of little 1%ers in their business. So if it's not an area of passion for you, if it's not something that doesn't motivate you, collecting debt, outsource it. Find someone who is passionate about it. I think it just comes down to you yourself, knowing yourself as an individual, building a team around you, and making it a paramount part of your business. So hopefully that's a few things for people to take away. Managing cash flow, managing data, having a data control system is vital. And there's not one trick. There's plenty of tricks, but you just got to focus on a couple of things. And I think just having a plan is the paramount one.
I think you did a blog for us recently, Brad, and I think one thing that resonated in that blog was you said, don't be afraid to say no to a customer. You know, sometimes you can have a customer that's not good for your business. It's not just about having customers above all else. I think that really resonated with me in particular.
They're very hard, George, and it's no different to having a friend that wants to lean on you at every moment. Clients can be the same as well. And look, I'm fortunate enough in our business that most of the relationships are reciprocated. But yeah, I think you need to know who your target clients are. You need to know, everyone's got wages to pay. They've got operating costs to make. Yeah, don't get taken advantage of, and know the people that you're working for. And I think, yeah, like you said, and use tools like the CreditorWatch tool to understand the type of clients you're working for and do your due diligence up front. Know the people you're hopping in bed with, so to speak.
And I think it's really important, like having relationships and working with a team. I mean, having great tools is one thing, but working with the right people is also really important. Angela, just to you now, just a question. During COVID, we all saw businesses kind of struggle. There was a lot of different uncertainties and they were getting pulled in all directions. Look, what do you recommend businesses do to stay kind of proactive, prevent cash flow issues and prevent bad debts? Like what are your key kind of things there?
I think we've all been working in a space where we've been trying to do more with less, or we've been trying to do things differently with people working remotely. So our access to information has been hugely important. Information and data generally is power, and the more you know about your customers and the way in which they're traveling in business, the better off you'll be. Now, I think it's an old saying, but the old one about credit is a privilege, not a right, seems to be forgotten. And that goes back to your point, Brad, about being able to say no sometimes, because there are some customers out there that are simply not worthy of your loan. And that's what credit is. It is a loan at the end of the day. So making sure before you start working with somebody that they are worthy of that loan is incredibly important. But more so, I think it's a case of not setting and forgetting. You shouldn't take on a customer and leave them in as a customer and away you go. Things change very quickly, especially in this climate. So we need to understand the behaviours of our customers. I was on site with a client last week, and George, they'd taken up the offer to have the review of their portfolio, and they were looking at the debtor logic stuff. That was really powerful information, because what they were able to see was customers that may have been on 30-day terms, but religiously paid 46 days or thereabouts, were actually incredibly good clients, and they had good margins on them. So they really just needed to leave them alone. But there were other customers that had other issues, and they could clearly see, once they dug a bit deeper, that they were paying their accounts but not paying others as well. So clearly within that supply chain, they were more important but there were oddities within their payment and payment behaviours. So absolutely never set and forget. More with automation is incredibly important. So again, Brad touched on Xero and MyOb, I guess, as the main accounting systems, cloud-based systems that SMEs use. We might have the odd one use Reckon occasionally still, hanging on there with white knuckles. But the awesome thing about programs like Xero is that it's given a small business owner an opportunity to really have a transparent, granular view of their accounts. So they can see how old an outstanding invoice is. They can see with a little bit of digging how old an account is on average when somebody pays them. And that's really important. It might be the case if somebody doesn't meet that worthiness benchmark that you don't stop dealing with them altogether, but that's a conversation where you might need to rethink the way in which you deal with them. So is it that you get more monies up front, periodic payments, or get it all up front? You just need to have the confidence to have the conversation. And being armed with that information, and I think sitting down and having a conversation with your customer about how much they're costing you to deal with them, might be insightful for them as well. They may not realise that while they've been trying to do more with less, they've dropped the ball a bit as well. So information and insights, not setting and forgetting, that's huge. And regularly looking at your information. Brad also touched on having the right people in the business make calls and follow up. If that's not you as a business owner, get somebody else to do it, but make sure they're trained in terms of the right way to collect an account, the right way to position, the tone, the context, and how to have all of the information to hand before they make the phone call. The ACCC ASIC guidelines have been recently updated, so it might be a time for creditors to have a little review of that to make sure that they are compliant, they're not overreaching and contacting people too often, and they're not maybe saying things in a way that they shouldn't be saying, if they're being a little bit more aggressive about things. And people can get very emotional because it is their money, it's your money that they're playing with, so it's easy to get emotional. So having somebody else make that call is important as well.
I think that was a follow-up question that I was going to ask you, like, do you have a lot of emotionally charged conversations with both your clients and also people you're trying to collect from? Is that something that comes up a lot?
No, look, Optimum, we've been going for 12 years now. We've never had a complaint or a concern from a customer that we've dealt with. We have had people, I guess, unload, and we take the firm but fair position that they're not bad people, but they might find themselves in a difficult situation at the moment. So we have had people unload. We've also had people phone back and apologise and then pay. They were frustrated and needed to get it off their chest. We have had clients make some poor decisions which have made the account more challenging to collect long term because they might have, said something out of turn or a little bit personal to the customer, and then everybody's backs up, which makes it a little bit more difficult to collect. But in the main, firm but fair, and I think good policies and procedures will hold you in good stead. Any business that extends credit should have a policy and procedure about in place, even if it's a one-pager, about who does what and when and makes the decisions and when things are followed up.
No, that's great. And I did have a follow-up question, but you've answered it to an extent, which is how do you stop kind of bad debts kind of happening in the first place? But look,
yeah.
What's your one or two key things? And policy and procedures are great. And how would a business start that process of investigating, getting those?
No, I'm going to tell you, you guys have got some good templates. We've got some good templates that we share with everybody as well. The other is the Chambers of Commerce in each state and territory have some good templates where people can start. It's all very hard to look at a blank piece of paper and try and fill it in, but they've got the templates and you just adjust it to your business. It's a great start. Your foundation documents, so your credit applications, terms and conditions, set the basis for your relationship. And it might seem like annoying fine print when you're setting it all up, but they are the things that become your collections toolbox. When I'm getting an account, I'm looking at the credit application and I'm deciding who is it that our client has dealt with, because some people get excited about the project. I've seen it particularly in construction, where an organisation might have set up slightly different corporate entities to deal with specific projects. So who is it that you're dealing with? What are the agreed terms? How do you handle variations? Variations on the fly can very easily end up in disputes, which result in avoidable debts or delays in payment. And I think sometimes we have protected species hiding in our customer base, a little koala or two. And what that means is, you know, they've been customers forever. They surf with the general manager, so we just don't ring them or we leave them alone. To some extent, we need our friends in business, but we can't have our friends take advantage of us by not paying us. So we do need to have those conversations. So avoid the protected species.
Yeah, that's great advice. And Brad, just back to you. You know, you looking at numbers all day, or your team are, and you know, give us a little bit. You still jump in. I know you're a big advocate for online accounting, and you like to get in there and get your hands dirty. But just tell us a little bit about, you know, what do you see with bad debt with your customers, and what's kind of like that point where you decide to, you know, have a conversation, and what does that conversation kind of sound like?
I think first of all, there's a number of my clients, and I think a lot of businesses in the country that could deal with an Angela in their business as well. So and I'm like listening to Angela as well. I think it's paramount, like I said, for business to have a system and have a process in place. And when things do go awry or you feel out of your depth, people like Optimum are other people to contact. So yeah, excellent information, Angela, as well. And I think everything's very case by case, George. Look, bad debts, you try to avoid them happening, but sometimes they are inevitable. They're going to happen in a business, but it's just protecting yourself against the downside there as well, and being aware when there are the early warning signs. Look, I've sort of done a little bit of analysis of my top 10 clients as well, and what I'm sort of finding, and sort of even doing a bit of industry research as well, is that the ideal bad debt percentage of sales is 0, but that is not going to happen. I sort of find around that 0.2% of sales is an ideal number, 0.3% of sales to be good, 0.5% to probably be average, and once you sort of get around that 1%, it is too high. Bad debts can cripple a business, and I've mentioned it before, it can also cripple the individual who is in control of that business and the shareholders in that business as well. It is a specialist area of your business. You need to regularly be looking at your board reports, looking at your monthly numbers. What are my current debtors? What are my 30 to 60 days? What are my 90 plus days? A little bit extra research I did, George, on this question as well, is literally once that debt becomes due, you're 5% less likely to collect that debt. Yeah, right. Another 30 days down the track, you're 89.9% likely to collect that debt. 90 days after due date, you're only 70% chance to collect that debt. Leave it 2 years, and I've got a couple of those, and they are family, Angela. Unfortunately, Ipswich is a big place, and we all seem to be related. 9.8% chance of collecting that debt, so it's near gone. So yeah. It's just an area of business that you work so hard to get that job completed, to sell that product, to complete that service. We've all got to pay people to as part of that process line. It's so hard to make a profit, you just don't want to give it away. Yeah. So sort of similar to what Angela had mentioned before, you just got to know the people that you're working for. You got to see those warning signs early. Put a stop credit on a client if they're not going to pay your bill. Offer them, like cash is king in the business. Offer them an early payment discount. You just got to pivot. You got to think on your feet. And like I said, when you're out of your depth, get an expert like an Angela from Optimum to sort of take over that debt. It might cost. There is always a fee in doing something, but it's going to be a fee well worthwhile as well. So you just got to regularly, as I said before, George, regularly look at your numbers and sort of know. And debtors is a key part of that. understand your KPIs, understand your liquidity ratios, and look ahead. You know, I mean, no one can afford to just have a debtor register which is all old and uncollectible.
And just out of interest, Brad, sorry, Angela, just out of interest, you mentioned, you know, you got lots of clients who are online and you can have a look at their books and stuff. Is that the norm now when the most clients embrace broader services from you, or is it a mix?
Yeah, and I think it's all, George, we are a massive advocate of using specialists in a business, and there are clients who want to have that control, and we do encourage our clients, whether they outsource or do it in-house, to understand how to use their accounting software and understand how to read a report and understand their numbers. So you can't sort of wipe your hands clean and go, I'm not touching it at all. But we do have a lot of clients that we do sort of have fixed engagements, and we do their things like business activity statements quarterly. We do annual tax planning, so we're talking to them every quarter about their business. And it's like anything, you get what you pay for, George. So, you know, a lot of the clients do take us up on, it is a growing area of our business, the external CFO offering as well, where we do sort of manage a client's accounts a lot more holistically. I think it's very important the client still has some control of the invoicing, but we do help clients with things like payroll and paying their accounts and managing their accounts payable. We do a lot of work with clients as well in terms of analysing their numbers when it comes to things like KPI reporting. What jobs am I losing money on? I think that's very important. A lot of businesses aren't just one-trick ponies and just doing one thing. A lot of businesses have, you know, different divisions in their business, or, you know, different clients in their business. You need to report on how you're going in each of those areas, whether they be divisions or each of those clients. So if you're regularly losing on a certain type of client, well, you've got to have a conversation with that client and review your pricing structure, review a different strategy to approaching that work. But George, I'm finding more and more accounting firms in particular. Look, there are, I don't want to speak negatively about our profession, but there are a lot of accountants who are still just, I believe, fulfilling a bookkeeping role, which is important to make sure the numbers are right, but you need to know what the numbers say and what story they're saying as well. So we are helping clients a lot more holistically in their business. SBB Partners, we have sort of overarchingly, look, tax, accounting, business is our core services, but we have decided we want to help clients at a lot more holistic level. So we do have a financial planning business, we have a risk insurance business, we have a lending business, we do have a bookkeeping business, but I think a really growing area as well is we have a people IR business as well. I sort of mentioned to you the significance before in terms of understanding you and understanding yourself as a person and yourself as a business owner. I think that's paramount in the business. So we are a massive advocate for, it's called, it's like a Myers-Briggs, but it's an extended EDIS program as well, which we often start at the leader of a business and the management team to sort of make sure they're working in sync, and that owner of the business knows their strengths, their weaknesses, their motivators, the things that stress them in their business, the things that they might struggle with as well. Because without knowing yourself as an operator, you don't know, how do you know how you're going to run your business, or how you're perceived in the public eye, or how you're perceived by your fellow team members. So we are a lot more hands-on with our clients than ever. Massive believer in outsourcing things once they're outside of your realm of skill set. So people like Angela from Optimum, law firms, real estate agents, general insurers. It's all, we have the numbers in front of us. We can see trend lines. We can see when people are spending more than what they should be. So that's a role, I believe, of an accountant, to be a client's financial GP, to be their advocate, to basically look after them. And I understand. And I understand some people out there believe they can run their business on their own and may not need an accountant. That's fine. But at the end of the day, I think it's in our winner in itself to sort of find somewhere where we can help a client, even if it's a little bit of complimentary free advice. If you can't invoice it, why not preach a bit of goodwill to the client? So.
No, that's right. And a kind of a strong theme that's come out of today is that it is about having a team of specialists. You've both been pretty strong on that. So Angela, on that note, at what stage should a business approach someone like yourself and a business who can help them with recoveries and collection? Because we get it all the time when we're talking to customers. They say, I've got a bad debt, it's only a few $100s, I'm really angry about it, I want to sort it out can I talk to someone? Is it at that point, or is it earlier? Is there a sweet spot, or is it just good to have that connection already?
Brad tapped on to some good information a little bit earlier about the older a debt, the harder it is to collect, and the more or the less likelihood you are of being able to collect it. Further to that, it's going to cost you more because you're investing time and effort, someone's time and effort in trying to collect it as well. So that dollar is worth less to you. Now that you're inspired, Brad, I think Christmas is going to be interesting at your place when you hit up all of your family. So I think that I come back to the terms and conditions, your foundation documents. So immediately that somebody has breached the agreed terms and conditions, you have the opportunity to move a matter forward. And if you're also armed with information that comes from those proactive alerts that come from CreditorWatch and other bureaus, you can be preemptive sometimes. Those terms and conditions are also going to give you some securities that you can rely upon. So whether or not that's a director's guarantee, a capable interest in property, or the use of the PPSR, as long as people are registering in the right way, there's opportunities to reduce your risk, reduce your debt, reduce your exposure if something is going awry. If you've got a small account and you're very emotional about it, again, somebody else can help you collect that. If it's a smaller account, say under $1,000, I take the position that if you don't ask, you don't get.
Mm-hmm.
If you're not doing something about it, there's no point being cranky or angry or disappointed or anything else that the account is not being paid. You have to ask for that payment. And that's where we come back to that systemized approach. So whether or not it is a phone call, a letter, using your Xero automated reminders to be preemptive and proactive in reminding people that accounts are outstanding. Sometimes people genuinely misplace an invoice. It does happen. You know what? I think you've got to be easy to pay as well. Be easy to pay. So take your payments by EFT, take payments by credit card, and you can do that again through Xero and MyOb now with very easy, click here to pay reminders. So think about your process. Also, have an invoice that makes sense. There's a lot of avoidable debt that's referred to us because the very basic nature of the invoice, the information contained on the invoice was wrong. The wrong address location, it was missing a purchase order, it had the wrong terms and conditions because the creditor had entered into extended terms with that client. So they're silly sort of avoidable things, but there's an opportunity to put yourself in your customer's position and go through that process and get your suite of documents out and have a look at it and see where you can do better at being easy to pay.
I think that's a really good point, because sometimes you get an invoice and it just goes to the back of the shelf because it just doesn't make sense.
That's right.
We've all been there.
And I think a little bit, like Brad, if our clients are not sure, we're here to tap for a bit of an advice and a chat about what to do. And sometimes that might be to make some recommendations for them to try something else. The old have a rep drop by and have a look at what's happening on site is important still. Are they busy? Are they well stocked? Are they well staffed? Or have they had a heap of turnover in staff and the phones aren't ringing and it's looking really quiet in there? Your sales team out and about as eyes and ears are awesome.
Yeah. I think, Angela, on that as well, and I've, George, seen it, just no shocks, no surprises. I think clients, because that's one thing about having a bad debt, but also deferring payment and having those lock-up days in a business, which are the days between starting a job and getting paid. I know a lot of people might get a bill and go, I'm going to put that there because I don't like it. That obviously is going to defer the payment of an invoice as well. So I always find trying to be transparent with your client, tell them up front what something's going to pay, and at least you're reducing that element of shock and the end recipient of your service or goods putting that invoice away in a corner and waiting one day to dispute it. So I think this transparency in business is massive, and especially when it comes to that relationship around an invoice.
Conversations.
That's basically it, isn't it? Talk to your customer and make sure you're on the same page as often as possible. Just got a couple of questions. Robert The webinar is due to finish at 1:15. Sorry, I should have covered that earlier. How far should we escalate debt? How aggressively should we escalate a bad debt? And when do you kind of decide to stop chasing that debt? I think you've kind of answered it to an extent, but
I'll let the industry expert, Angela, answer that.
Depends on the size and the age of the account. So if it's a reasonably fresh account and the customer is still there and still trading, you've got to balance their assets, their ability to pay versus their attitude toward payment and potentially pursue. If communication channels are closed, then we have, I guess, processes, legal processes that we can head down, and maybe the person that's asked the question is considering a larger debt. There are costs associated and there are scales that apply for the pursuit of debt. So the larger the debt, the courts in that user pay system feel that you can pay more, and you have to weigh that up. And again, I come back to the terms and conditions and making sure you've got a good cost recovery clause so that you can add those costs, commissions and fees onto the account and make the debtor truly responsible for their poor behaviours rather than you carrying the bag there. How far do you go? There are some creditors that will want to make a point and will take the matter to the nth degree. My position on this is we take these actions to get paid. So you might issue a claim, you might obtain judgment, and for some creditors that's enough because that judgment's recorded on the credit file. It will stay on file for between 5 and 11 years, depending upon where you are. And at some point in the future, we see debtors coming back to us after the default because their circumstances change. They want to buy a house, they want to open a new business, they want to expand, they need funding, and it suddenly becomes very important for them to try and resolve the account in full to clear their credit rating. So those tools, those collection tools that your bureau provide are really important in that process. So yes, age, size of the account, whether or not you've got the ability to recover costs, whether or not the likelihood of collection is solid, and your information can help us with that. George, the CreditorWatch information can help us with that significantly. We use your credit scores within our collections process to identify how much resource to apply in the collection of the process. And sometimes the best thing that we can do for our client is actually to tell them to back off, to give it up, to write it off, especially at this time of year. And it's more cost effective for those smaller dollar value accounts or ones where they have huffed and puffed and it hasn't been collectible to make provision for bad debt write-off. Would that be right, Brad? You'd agree with that timing?
Yeah, and I think unfortunately we're running out of tricks when it comes to tax planning, and that probably is tax planning strategy 101. Angela and George, yeah, we're coming into I suppose to June, pre-30 June, and at least, yeah, get the tax deduction for writing off that bad debt. And if it does get recovered, well, then we can bring that back into accounts as income. But I think, as you've sort of mentioned, Angela, and before, it's all about early intervention. Try not to let that debt get to that stage, but inevitably there will be some. But I think the longer you leave it, the harder, yeah, it generally gets to collect that money without costing an arm and a leg and without costing a lot of pain and agony. Absolutely,
yeah.
And Brad, a question for you. It's a bit of a curly one. You might need to kind of have a bit of a stab at it. And
we'll
then
jacket off, George.
What would you recommend in terms of a business structuring themselves? Do you do a lot of work on structuring? The question
we definitely do, George. And often there's not one size fits all when it comes to this approach. So often I look at upfront and ask the client, what is their ambitions, what is their plans for the business. I think it's very hard though in this day and age to sort of go away from some sort of corporate structure. Obviously the advantages of limited liability, asset protection is huge. We live in a litigious world, so at least present that veil of protection. And there's obviously a lot of other benefits. The corporate tax rate's reducing to 25% for small business entities as of 2021, 2022. The salary packaging benefits in operating via a company. You've got the ability to admit other equity participants. So I think companies are sort of our go-to structures these days. I do like to implement where possible, and I'd rather it's easy to get it set up right to start with, as well as a discretionary trust as a shareholder as well, especially if there's multiple beneficiaries in a business, and then there will be that people do crave that distribution flexibility, or they do want to bring in a shareholder possibly down the track as well. They've got a better ability to minimise any capital gains tax exposure as well. But it sort of depends on the situation, George. It's not a vanilla, this is what we do.
Yeah.
If someone just wants to do a little bit of part-time work and do some leaflet deliveries, or do some dog walking, for instance, mate, let's set up a sole trader and off you go. But you want to make sure in this day and age that you've got the right structure to grow, the right structure that banks will appeal to banks, and the right structure that will appeal to potential investors that you might have in your business down the track as well. So more and more these days we're seeing a proprietary limited setup with a discretionary trust type of shareholding arrangement.
No, that's great. I think it's it's something, like you said, it's not one size fits all, and someone should seek a bit of advice there if they need it. Look, that kind of brings us to a close today. I really thank you guys for your insights and your words. I think our audience will find them extremely helpful. There's a couple of questions which haven't been answered, so I'll definitely make sure either Brad or Angela get back to you and kind of tick those off. We will be sending. Yep, that's great. And we'll be sending the recording around and some follow-up information as well. So once again, thank you all for your time. Thank you, Brad and Angela. It's been fantastic having you both on, and look forward to doing it again.
Thank you, George, and thank you, Angela.
Thanks, everybody.
Thanks, guys. Cheers.